Welcome to Coleman Report Live. I'm Bob Coleman. We're talking Main Street and the small business lender who helps it grow. Lance Sexton, Delaney Sexton, no relation. Lance, good to see you on this officially the beginning. We're halfway through the fiscal year, if my math is right.
Yeah, Bob, my understanding is that all PPP loans are going to be automatically forgiven. Oops, April Fools. No.
Don't do that. Oh. Delaney, again, your job is to bail your dad out. That's you can tell him to shut up. Hey, just bring you up to date. We did a good webinar last week, and these are always important facts. And what is the number of screen out when you process an SBA 7A loan GP? Actually, Lance, I think this also applies to 504 loans, but maybe that may be a reach. But all of the stuff they need to look at, and they don't like something's missing on the 1919, and Joseph jumped the gun here. Lance, what's the answer?
Well, typically it would be credit memo being incomplete.
Right. So it's something completely in your control. Go ahead, Lance. I didn't mean to cut you off.
But I would just state all of these are reasons for screen outs, and but the credit memo is the big item, making sure that it's properly crafted. You know, Bob and I did a webinar that it touches base with all the requirements in the SOP.
The takeaway on that is follow the 1920. Use that as your template for your credit memo, and just boom, 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 boom.
Yes.
And I think that's, and Joseph, I think what you did, oh yeah, here we go. Let's see, did you already, yeah, you gave the answer. We'll see if people read that.
Well,
what's the number reason for an incomplete credit memo?
It's a new question. The answer wasn't given.
It wasn't given, okay.
And all of these are important, but
go ahead, Lance. I would let you do your riff on this, because this is your.
Well, first of all, one thing.
Go ahead.
I'm sorry, Bob. One thing that I wanted to mention. I see a lot of credit memos where there are volumes of information about the industry, volumes of information about other things, but they'll forget to address important things like these 4 items. But the answer is life insurance is not addressed.
Believe it or not.
When there's, you know, of course, when SBA has all available collateral rule, and when the loan is short, doesn't have full collateral coverage, one of the best ways to meet all available collateral is adding life insurance.
That's the only, that's the only way to do it. And also notice that we're saying you don't need life insurance. We're saying it needs to be addressed.
Yes, why you require it or why you may not.
Yeah. Talk about credit elsewhere. 71% said that is important.
Yes.
And we need to get it, Lance, real quick. Go over the rules that we need to follow.
Well, typically, you need to address credit elsewhere. It doesn't need to be a copy and paste canned response. It needs to be.
It cannot be.
SBA wants a specific discussion of credit elsewhere related to the loan that's in the credit memo. But credit elsewhere is so important. But what I was saying about the volumes of information, Bob, I've seen credit memos that have a 6-page analysis of the industry, but they forget to address credit elsewhere.
Credit elsewhere can be addressed in 1 sentence, 2 sentences.
Most common reasons to meet credit elsewhere is the borrower needed a term longer than the bank's policy would allow, or another common reason is the collateral does not meet the commercial lending policy credit or collateral requirements. Other
lenders may say, yeah, and as long as you're consistent, other lenders may say we do not do startup loans within the first 2 years conventionally, so therefore we're going to do an SBA. And that's what they're doing. You should understand the background. This is being pushed by Congress. Congress wants to make sure when they answer to their constituents that we have this federal program. Why are we doing it? And they have to have the answer. Well, without the SBA, they cannot get this type of financing. Therefore, we have to substantiate why we're doing this loan with SBA and not conventionally. Again, as Lance said, 1, 2 sentences, but you do not put credit is not available elsewhere, period. SBA will not like you for doing that, because they have to turn, and the reason why they have to give all this information to Congress. So this is why we're doing this.
And it could be as simple as, the collateral provided on this loan opportunity does not meet our commercial underwriting standards for or collateral requirements for a commercial loan. And you might, I love the ones, Bob, where they actually cite the, portion of the commercial credit policy that for collateral coverage, but it can be one or two sentences, but it needs to be specific to that loan.
Where lenders are being criticized is when they're not even addressing it, or they have the cut and paste, credit's not available elsewhere. You are not going to, I've not heard of a criticism where you say the collateral shortfall or the term or the interest rate. I've not heard an incident where SBA is second guessing that. They just want to know what your thinking is. And they're not coming in saying, no, that's not the reason. They want you to address the reason. That's the problem. That's the problem.
Yes.
Very good. Joseph, go back to the previous chart. And you can see credit memo is incomplete. The form 1919-1920 is incomplete. That was there. Financials aren't all there. Lance, we had a question the other day. Yeah, I thought it was a great question. I apologize who sent it to me. And the question is, we're having trouble getting 4506s. Our borrower filed their 2019 and 2020 tax returns, but they're not in the IRS system yet because of 2-year backlog of inputting this stuff. So 2020 is pretty simple, but so I can't verify as a lender the 4506 on the 2019 because the IRS hasn't done their job yet. What do we do?
Well, Bob, in the SOP, it gives clear direction on when you can't get the transcripts. You have to document your efforts to get the transcripts, and then you can go ahead and proceed to close the loan, but as soon as transcripts come in, you have to reconcile them. But if you'll go into the SOP 5010-6 and Control F 4506T or tax transcripts, you'll get to that section. Just read through it. You can go ahead and move forward without them. Now, a lot of institutions there's some quicker services for transcripts, but they're more expensive. So, but some institutions are moving toward those.
Lance, would you feel comfortable if a borrower walked into you and say, hey, Lance, here's the situation, but here's my 2019, and here's a letter from my CPA certifying that he or she sent it to the IRS, and these are the numbers, and here's the return receipt. Would you accept that?
Obviously we're going to submit a 4506T or the new IRS form, I think 88 something, but we're going to submit it and document our efforts. You document a first effort to get it. You document a second effort to get it. If you still don't receive it, I think it's within 10 days, you can go ahead and proceed to close. But as soon as the transcripts are received, you've got to go ahead and reconcile.
Yeah, very good, very good. And then if it comes back and there's discrepancy, that's a whole nother conversation, but follow up and get the 4506 even though it's in the future. Very good. Joseph, this came in today. I'm going to let Joseph do this one. What are we talking about here, Joseph?
This is just an update for April 1st. Effective today, the 7(a) direct loan interest rate is 3.13 and the 504 is at 6%. So I've included the information notice for everybody to have for the records.
Lance, do you know what the direct business? I don't know what the direct business loan rate was.
I don't track that, Bob, because there's not been direct funding. We've had some pandemic programs and disaster programs. Of course, EIDL was.
This is also, I'm sorry, go ahead.
But there's not really been a direct lending program.
Yeah, but this is also the optional PEG rate. You can use this in lieu of prime.
Oh, yeah.
I know of no lender who's doing that, but that is an option that you have. We do that. Okay, Fraud Friday. Delaney, what is the Department of Justice telling lenders?
Well, it's about the second year anniversary since the start of the Paycheck Protection Program. And we're about 90% through forgiveness so far based on SBA numbers, I believe, released earlier this week. And, you know, here on Fraud Friday, we've read and heard about dozens of stories of borrower PPP fraud. But the Department of Justice is going to start shifting direction and paying a little more attention to the PPP lenders. Earlier this month when we talked about Rafael Martinez, I hadn't realized this, but he was the first PPP lender to be charged with PPP fraud. So now that they're shifting directions, they're going to be focusing a little more, going back through some of the borrower fraud stories and determining whether or not lenders played any role within that, along with they're going to look at non-traditional lenders, make sure everybody was complying with everything. So
yeah, Raphael he was a New Jersey banker. I don't have the name of the bank right off the top of my head.
It's MBE Capital.
I'm sure they appreciate that we mentioned him. But he was a gentleman who was receiving money via FedEx packages, cash in FedEx envelopes. So yeah, that was pretty obvious. Lance, what's your take on this? Are you concerned that the DOJ will make this special announcement?
Well, you know, all your traditional banks that were involved in PPP probably this is not a major area of concern. I do think they're going to take a look. You know, SBA approved some non-traditional SBA PPP lenders, and they probably will take a look at if there's any pattern of fraud from the individual investigations. But, you know, long and short of it, again, the IFR says that lender can rely on borrower certifications in almost every area of PPP. I think where the challenge will come is if there was lender involvement in the fraud itself, like if there was a lender involved in accepting large numbers of so-called fraudulent applications, knowingly accepting.
Yeah, look, we're in a regulated industry. SBA, you're always going to be looked over your shoulder for what you're doing based on the type of lending that this is. When it's government funds, you have a responsibility and you're open to that.
I had a conversation, Bob, with another big PPP lender, and we were talking about so many aspects of PPP. SBA will come back and say, well, it's a PPP loan's a 7A loan. Well, we were talking about it's not like any 7A loan I've ever seen. No guarantees, no personal guarantees, no collateral, unusual term, limited application information. I guess the crazy thing is when SBA chooses to review a PPP loan, it's like they asked for a complete credit package from the borrower, but in the application process to get the funds, they didn't ask for that much information.
Lance, correct me if I'm wrong. My initial take on this is SBA is not going to come after you. The feds are not going to come after you for bad judgment. That is not a crime. Bad judgment is simply we made a mistake. It's again when you're getting FedEx envelopes full of cash. When you're actively recruiting, you're getting bribes or you're soliciting and doing shady stuff that we all know what the line is. Those are the people that should be worried. I'm not worried about this. My only takeaway that I would have on this is let's be careful with the emails. The Carriegi story is one of the damning email was they got us. I talked to a lender recently. They were in a lawsuit, and part of the lawsuit is the entire hard drive was backed up and given to the other side. So assume everything you do on that bank computer is going to be open. Any emails, specifically emails. Just be careful about emails. Be careful with text messages. Assume someone else is going to read it. And that's
oh, absolutely. And one thing you mentioned, Bob, that I think is the cornerstone is, did the individual banker or the bank benefit? It's like the banker that was getting FedEx boxes full of money. Well, yeah, that that's somebody you
We all
want to go after.
understand that is something that should not happen, yes.
But I don't think all the PPP lenders should be worried because they've got some fraud. If you did a lot of PPP loans, you're going to get requests from various agencies, subpoena requests for information. I don't think that should elevate concern with you. But, you know, if you were a part of any sort of scheme to defraud PPP, I think you should be concerned.
Yeah, I would not lose any sleep over this. That's my opinion. What's going on in Arizona?
Now, this was another big group conspiracy for COVID fraud. I believe it was for PPP and EIDL. 20 people in Arizona, a majority in the Phoenix area, were involved in a scheme with 5 leaders, 2 people in particular, their brothers Nino and Nicholas Mahili. They were recruiting people. Yeah, I'm not the greatest with some of these last name pronunciations. They were recruiting people, basically coaching them through, allegedly, how to achieve and obtain these loans, false claims about gross earnings, cost of goods, numbers of employees and whatnot. And so these people were receiving kickbacks. This is a similar story that we've heard many times before. Something interesting is a lot of these people, there's a lot of company formations